I'm Adam Jusko from ProudMoney.com. LendingTree, the financial loan marketplace that has been around since the dawn of the internet, they announced today that they are launching a new credit card called the Win Card. They're doing this in partnership with the company Upgrade, and it's sort of a non-traditional credit card model. So I'm a little surprised that LendingTree, with their long track record and having a little bit of a brand in the personal finance space, I'm surprised that they are going this route because I think it is a little more confusing in terms of how the card works, and in my opinion, maybe a little worse than how a traditional credit card works. So the Win Card is a no annual fee Visa card and works just like a regular credit card. You go out, you make your purchases wherever Visa is accepted, and then you're going to be billed for those purchases. However, if you think of how a regular credit card works, when you make purchases, you then have a certain amount of time to pay off all of those purchases in full without having to pay any interest. That is called the grace period. So you have a grace period. As long as you pay everything off, you're not going to have to pay anything. So it's like a free short-term loan with traditional credit cards, right? The Win Card, on the other hand, does not have a grace period. The way it works is that every purchase that you make with the card is essentially turned into a small installment loan that you pay back over a certain period of time in equal monthly payments, and there's an interest rate attached, and that is attached to every single payment you make. So it is just like an auto loan or a personal loan or even a mortgage loan where you have a repayment period and you start paying interest from that first month. So there is no grace period where you could pay back your purchases and not have to pay interest. You will pay interest. Now, obviously, having no grace period sounds worse on the surface, but LendingTree and their partner Upgrade would tell you that this is actually a better model because it stops you from ever getting to a point where your debt can snowball to a place where you no longer can handle it. With a traditional credit card, you have very small minimum payments. So yes, you should be paying off your balances in full each month and using that sort of 0% loan that you get each month. But for many people, they don't do that. They make a small payment, they let the balance ride to the next month, even increase the balance, the interest goes on top, and over time they can create a very, very large balance and maybe not have the money to pay that off. So with this model, you have an installment loan essentially with everything you buy where there is an end point. You are going to have to make a monthly payment that is the same each month until that is paid off for each purchase. So there's always an end point where it's going to get paid off, even if it's guaranteed that you are going to pay interest. Now, whether that's a compelling argument or not is going to depend on what kind of credit card user you are. If you have a history with credit cards where the freedom to allow that balance to revolve from month to month and get bigger and bigger and have debt piled on and make payments that are much smaller than the balance, if that was too much for you and the debt got out of control, well, this type of card will give you some discipline, some forced discipline that maybe would be better for you. But if you've had credit cards before and you have some discipline and you know you're not going to let your balances get out of control like that, well then a card like this makes a whole lot less sense because you know you're going to pay interest and you don't really need that sort of babysitting aspect that is going to force you to make bigger payments each month because you already know how the card works and you're going to make sure that you're making those payments. And it's not like the interest rate on this type of card is any better than a traditional credit card. The interest rates they're showing anywhere from 14.99% all the way up to 29.99%. So if you made a purchase with this card and you strung that purchase out for a long time, and it looks like you can have up to 3 years to pay, even if it is in equal monthly installments, well then that's a whole lot of extra interest that's going to go on to those purchases if you don't pay them off in a timely manner. And it's not like you can't default on this type of card. If you can't meet your monthly obligation, you're going to be in trouble regardless. So it's good in a way to have that enforced discipline and to have that larger monthly payment that forces you to pay off your card within a certain period of time. But if you can't meet the monthly payment, you can't meet the monthly payment. And so you could get yourself in trouble either way. All right, so that's a lengthy look at the model. Let's take a step back and look at some of these specific features of the Win Card. Like I said, no annual fee. You've got no late fees on the card. You've got no foreign transaction fees. So if you use it outside of the US, no extra charges. You've got a up to 2% cash back reward on this card, meaning you get 2% back on everything that you purchase. In order to get the full 2% reward, you have to do two things. Number one, you have to be on auto pay, meaning that they can automatically take your payment out of your bank account each month to satisfy the payment on the card. And then number two, because this is a LendingTree product, LendingTree wants to keep pulling you back into LendingTree, so you have to be a registered member of My LendingTree, I think it's called, and you either have to go there once a month online and log in, or log in through their app. So you have to go to LendingTree at least once per month and be on auto pay in order to get the full 2% reward. But we need to talk further about that 2% reward, because normally on this channel when we talk about credit cards that give you 2% cash back, we are talking about cards that allow you to pay off your full balance with a grace period, don't pay interest, so you get that full 2% rebated back to you if you're someone that pays everything off. With this card, as we've said, you are going to pay some interest on your purchases. So that reward that you get oftentimes could be completely canceled out by the interest that you pay. If you look at this card and let's say your interest rate is anywhere from 18 to 24%, which is likely, that means, and this is just rough math here, but if you look at that over 12 months, that means you're going to be paying 1.5% to 2% per month on your charges. So if you're getting 2% back, that's great. But if you are paying at least 1.5% to 2% every month on the things that you are charging to the card, it might be a complete wash. Maybe you get a little bit of a reward, but it's possible that you might actually pay more in interest than you're even getting from the reward. And the one final aspect of the card to talk about, because LendingTree has sort of called it out here as they're launching the credit card, and that is the fact that they're saying you could qualify for a credit limit increase with this card in as little as 6 months, it sounds like. And that is if you have made all your payments on time, and then secondarily, if your credit score has gone up during the time that you have had the card. So within the LendingTree app, you're going to get the Vantage Score 3.0 credit score. If that goes up 20 points from the time you get it to that 6-month period, or perhaps longer, depending on how long it takes, that is what could qualify you for a credit limit increase. Now, obviously, your credit score going up isn't going to be just because of this card. It's going to depend on other loans that you might have, other credit cards as well. So that is how the LendingTree Win card works. Now, I'm not a big fan of this type of card model because, as far as I'm concerned, if you're thinking of getting a card like this, you are essentially saying, yes, I am going to carry a balance, and no, I'm not disciplined enough to handle a regular credit card, which means I am spending money I don't have, especially on everyday things at a high interest rate, because I would rather be able to buy things that I couldn't afford out of my income and my own resources. And that's not really a cycle you want to get into, whether it's this type of card or whether it's a traditional credit card. I would love to hear what you think in the comments section below. Now, this LendingTree card at first is going to be rolled out to some people that are already LendingTree members within their registered members program, and then they're going to be rolling it out to more people over time, but you do have to be registered with LendingTree to potentially get your hands on it. I don't see that as great motivation to register with LendingTree, but maybe you see different. Anyway, put anything you think in the comments below. Otherwise, I thank you for watching. And as always, please go to proudmoney.com, where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. If you are not going to go to the website or you're not going to leave a comment, you might want to watch this video.